We got another one to talk about. We got another stock that's down a pretty good amount. It's Tractor Supply stock from its 2023 highs, down about 19%. I think it's down roughly 10% from the beginning of the year. A lot of investors are looking at it as a stock. Maybe it's time to buy on the dip. It's done pretty well over the long term. Wonderful company, very well run. Tyler, I know you have some concerns that investors need to consider, but we have three things that investors may want to consider doing with Tractor Supply or retail or otherwise. Tyler Crow, are you ready to have this conversation?
I'm always ready to have this conversation. Tractor Supply it's just a fun company to talk about.
Yeah, it really is. So I'm Jason Hall. This is The Smattering. Our videos are sponsored by The Motley Fool. If you're looking for more great stock ideas, please check out our special link, fool.com/The Smattering. The Motley Fool is going to give you its 10 best stocks to buy right now. That link might be especially important for this particular video when we get to the end. So be sure to listen through to the end. All right, Tyler. So what is Tractor Supply?
Tractor Supply, by their own definition, is a rural lifestyle retailer. So not quite the most aggressive farming sort of company that you would expect if you own 250 acres and run cash crops. You're probably not
This is
using
not this is
Tractor
not your
Supply.
feed and seed, right?
No,
This is
this
not
is,
your feed
I
and seed.
believe the term is gentleman farmer. You've got
There you
your
go. Yeah.
vegetable gardens, you maybe got a handful of chickens or something like
They
that.
sell chickens, actually. They sell chicks. They do. It's
Yeah.
an interesting thing that they do. So
So you can buy your
continue.
chickens from them. And pet supplies, a lot of clothing, basically a rural lifestyle beyond just like some of the basic feeds. I almost wanted to comp it to Agway. I don't know if anybody remembers Agway from a long time back. It was basically the feed and seed company that was in my local town. And kind of, I guess you could say Tractor Supply was the next iteration, the much better iteration of that because they took that same idea. It has been, to say the least, an extremely it's been a great business, number one. Like, I don't think anybody's ever walked into a Tractor Supply and had a bad experience. Whenever I'm in country, I go there every time. Best place for to get deer antlers for my dogs. And the stock has been an absolute wealth compounding machine for quite some time. And that's obviously why I think investors have been looking at this one is when you have these companies that know they do it well. They're incredibly good at execution. They have a unique sort of identity that can fight back against e-commerce, which you could definitely say Tractor Supply has with can't buy live chicks on Amazon.com as far as last time I checked. It's a great recipe for what you would look for in a market beating stock. Beyond just a great strategy, good returns on capital. The management have been good stewards of shareholder capital for quite some time. And I think a lot of people are looking at this stock lately because it is down rather substantially, along with a lot of other retail. Like we just did a video recently on Estee Lauder. They're struggling. We were mentioned before this video, Target's been struggling. There's a laundry list of retailers right now that are not having the best of time. And so because of that, I'm sure there's a lot of people very interested in Tractor Supply. Is this the time to buy right now? That's where the story gets a little bit more complicated, I think.
Yeah, let's talk briefly about some of the concerns that you have with retail. So again, we know about the pressure that the consumer has felt over the past couple of years with raging inflation. And as much as it's come down, it's still substantial. That 3% number is still substantially higher. It's 50% higher than the 2% that the Fed is really looking to get us at as the long term, like that's the long term goal. So you take that, the reality that inflation is still a pressure. The jobs market is not as superheated as it was. It's still pretty good, but it's not as superheated as it was. And then you think about other potential looming concerns. We're at the point now, this is the end of September. We're recording this on September 27th. So it'll probably be October when you watch the video. By the time the video's out, all of those federal student loans where there was that long moratorium, people are going to be getting bills and they're going to have to be starting to make those payments. And that's several $billion a month that's going to immediately come out of consumers' spending power. It's immediately going to start putting pressure on that. Rising interest rate, the Fed's
Yeah.
tool, that's going to be putting on that pressure too, is credit card interest fees are going to go up. Consumers getting squeezed.
And it's a slow squeeze too. I think a lot we talk about interest rate rises, and it takes a really long time for those sort of things to percolate through the industry. And We'll just think of mortgages, for example. Like right now, current mortgage is about 7.3%. It means every new mortgage that's issued today is going to be around that rate. And anything that rolls off of those old, nice 4, 5, maybe even better mortgages are rolling into a 7.3 or something like that. It just turns the screw ever so slightly every single time. So everyone's going to start to feel the pressure at different times as that becomes a headwind. And so if this is a persistent thing, who knows? But let's just say, for conservative sake, we're conservative investors. I've got my Benjamin Graham sitting on my desk, and I can see yours right behind you too. If we want to be conservative, let's just say this is a prevailing market that we expect to be in for quite some time. And so financing costs are higher, cost of capital is higher, and like you said, everyone's budgets are stretched a little bit thinner than they used to be. So
So you put all
what
that
to
together, Tyler, and that brings us to our first thing that investors may want to consider doing. And this is the one that you wanted to suggest.
Yeah. So my biggest thing when I see a lot of those macro sort of things, I look at the art of doing nothing. I think there's a lot of pressure with, like we said, tractor supply. Stock is down considerably, but also growth is decelerating. They're still growing, but they're growing at a much slower rate. Its capex is accelerating because it wants to build more stores over the next 4 or 5 years, about 200 net new stores every year. So the conditions on the ground for Tractor Supply have changed. It's not growing as robustly as it was. Its cash position is going to be a little bit thinner. And so if I combine all of those things together, it changes the expectation for the stock.
And maybe
And
the stock that looks cheap maybe isn't quite as cheap as it looks, right?
exactly.
Yeah.
And so as these things start to shake out of the market and value stocks get repriced into these interest rate environments, it's a good time to just hit the pause button and just watch how things go. I know you're a big proponent of tracking stocks, or maybe putting in a very notational amount so that you're paying attention to this one company.
Right. Maybe a
Most of
small
the
starter position, tracking
Yeah,
position. Yeah.
I'm more of the opinion I can watch a stock without having much capital committed to it. So, yeah, I'm going to watch comps. I'm going to see where things go, and I'm going to watch valuations. But it doesn't necessarily mean I need to commit any cash to anything right now. Also, cash gets 5% in a money market fund right now. So, you are incented to not be rash and have to jump into every opportunity that you see.
Yeah, I think that's a good general way to think about this. Now, another thing you could do, and again, I've mentioned it. I think either doing nothing or maybe taking a small. Because I'm the kind of investor that maybe taking a small opening position is not a bad idea because I'll pay more attention. I'm going to follow the story more close. Every month or so when I look at my brokerage, I'll maybe see the stock is up or down and be like, okay, let's dig in a little more. What's changed on the ground? Is it actionable right now? So here's the second thing that investors should think about doing is if you're looking at Tractor Supply, you might be thinking that this is like just a value play. And like Tyler said, there are good reasons. Again, looking at the slowing growth of the company, there are increased realities in terms of capex to try to buy growth by building new stores and expansion, which doesn't always work as great as we want. But sometimes companies like this, maybe they get to a critical mass that's smaller than they're aiming for, right? And we find out the hard way when sales aren't as great at these new stores as they had expected they would be. If you really want to talk about value and maybe a combination of a value and a little bit of a turnaround in retail, I would say look at Target. This is a stock that trades for 14 or 15 times earnings at recent prices. It has struggled. They've struggled with inventory over the past couple of years, kind of had some social issues over the past months, call it the past year, call it well, whatever you want to call it. It's affected the stock. It's affected their business to some degree, but this is still a wonderful business. Over the long term, it's done incredibly well. They've got a great e-commerce platform in place. Their operations on delivering on that e-commerce platform are wonderful. So if you're looking for value in retail, I think maybe you're better looking at Target. But again, all of the macro stuff is still real as a concern for even Target. But I think if you're looking long term, I think Target is priced right now at a really discounted price based on the quality of its business and its ability to deliver on that. Tyler, the last thing I want to suggest is the third thing is check out the link right here from our sponsor, fool.com/the smattering. There's another 10 great stock ideas from the Motley Fool right there waiting on you. The Motley Fool is 10 best stocks to buy right now. So you got, again, those three ideas. Either do nothing or do something very small. Maybe look at a stock like Target. Check out our special link and you can get even more great stock ideas.